The following is a presentation of TFNN. Trade what you see with Larry PESAVENTO. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry PESAVENTO.
Good morning from TFNN. Welcome to the May 9th. Terrific Tuesday edition of Trade What You See, not with Larry PESAVENTO, but with Steve Rhodes filling in for him. I hope everybody's having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We'll go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 9 o'clock in the afternoon. What a great time to be doing the show. Did it for years out there. Great to be back with you. So let's go ahead and get this show started. Of course, you can go ahead and give us a call at 877-927-6648. Internationally, you can send me internationally, you can call 727-445-1044. You can send me an email, steve@tfnn.com, but make sure you put in the heading, I don't know, something like mastering probability or trade what you see, something along those lines, so it doesn't go, or when it does go into the junk box, I'll be able to retrieve that. Inside the Tiger's Den, you can send me a ping at any point in time. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we have the equity futures, the S&P trading up a couple of points, 2.5 points, and the NASDAQ NQ, that's trading up 7.5 points. The Dow futures up 30. Russell 2000 up just slightly. U.S. dollar index up about 500 ticks out here. Trade out at 99.43. Gold is back $6. Silver's off 6 pennies. Light sweet crude back a quarter. Let's start with the equity futures contracts, get a feel for where they're headed to. Right now, if you watch this on Tiger TV, you see my 4-quadrant look at the daily equity futures contract. On the left-hand side, you've got the ES Mini. Right now, it's trading right at its TAS weekly market profile high. 23.97 and a quarter is the actual top of that box. We're trading at 23.97 as we speak right now. We can see that on Friday, slight close just above the green. Let me go ahead and explode this up on the screen out here. It's the weekly. It's the green solid line. In fact, actually, the close on Friday was 23.97.75, so 2 ticks above that market profile. That's not exactly being taken out with conviction. Yesterday, you had a test of that line again, 23.97 and a quarter. Today, you're seeing a test of it. Any close today above that is going to give you what we'll call a super bullish message, meaning do not go short. In fact, all of you out there that are thinking that a low VIX index out here, such as, last time we were back at these levels was back in 1993. We'll go take a look at that. But any of you buying into the theory that now is the time to go short because of that, it's all BS. It's all before Steve. We'll go take a look at it and really understand what it means. A lot of people just report on it. I'm going to show you what it actually means out there. If we take a look at the NQ right now, what we can see out here is that price is above its daily market profile. Now, this formed last week. And if we take a look at the structure of this box, you may not be familiar with these market profiles, but thanks to John Logan, we've gotten very familiar with it. I'm going to go ahead and actually turn it off. That's going to be the blue. Whoops, I didn't turn on. I got to turn off the right things out here, both the blue and the green lines. Actually, I tell you what I'm going to do. I need to turn the daily on. So let's do that. I'm going to actually turn price off because here's what I want to show you that took place last week. This was, I think, on Thursday when this market profile formed. And if you take a look at it, you're going to see 3 lines out here. You're going to see a top, a bottom, and a center box. Now, in my charts, because I use multiple profiles on the same chart out there, I've got them, the daily are all going to be in blue color. The green are all going to be the weekly. And what you can see here at 5607.60 was that point of control out there. We can also use POC for something else. That would be for trading like the UVXY and so forth. You can figure out what that POC might stand for there. But let's stay here. See how that point of control, 5706, 5607.60. It is early. But it's closer to the top of the box, 56.41. This should have been significant resistance. This told us that all the snipers, all the sellers were sitting up here at 56.41.75. Well, if we go ahead and we turn price on, you're going to see that they got a stampede on Friday, follow through yesterday. Yesterday was nothing more than a test of old resistance that now has become support. That says that as far as today is concerned, as far as tomorrow is concerned, until a new box appears, 56.41.75 is your go, no-go zone. At this stage here, it is nothing but go to the upside out here. So the NQ, it isn't stopping. It has not shown any sign as of 9/11 in the morning that it wants to stop. If we take a look at Dow equity futures contracts, it's very clear to you and I where its resistance zone is. It's the top of its daily box out here. That price point, by the way, is 21,010. Any move above that, you're going to see the Dow equity futures contract trade up to the 21,106. I suspect that's what it wants to do. Even if we get a dip out here, that's what it wants to do. It wants to get up to that 21,106 level. There is no top. In fact, the certainty of that is the mere fact that the volatility index closed at the session low that it did yesterday. The question you've got to ask yourself is, in the past, when the VIX has been at those types of low readings, did it signal that there was a top? Wouldn't that be like the logical question to ask yourself out there? We're going to go take a look at that. If we take a look at the Russell 2000 out here, you already know the answer, right? I would never ask you a question that I don't know the answer to. Well, I try not to. If we take a look at the Russell 2000, a little bit weak out here, what we know about it is that it has found support. It's been testing, and rejecting the weekly point of control out there. That's at the 1383.20 level. As long as it can't close below that, really the level you'd be really watching is 1367.80. What it really wants to do is trade up into the 1412 level. 1412 to 1414. So that is what the Russell 2000 wants to do. That is the daily picture for the equity futures contracts. Take a look at the ES, the NQ, the YM, and the Russell 2000. Now, let's go really take a look at what does that low volatility index really mean out here. If we take a look at this chart, we're going to go take a look at it, and it closed yesterday at 977. A year trade at 963 today. I'm telling you, stay away from those ETNs out there that trade the VIX unless you are an amazing day trader and know how to pull that trigger early out there. They are not long-term investment vehicles. But let's go back in time and take a look at what took place back in 1993. We're looking at a line chart out here because I think when you take a look at the volatility index, looking at closes, quite frankly, is more important than taking a look at what went on intraday out here. So we're going to do that now because we're going so far back in time. It's going to take me just a while to kind of get these charts out here. The bottom chart, by the way, for what we're looking at, top chart is the volatility index on a closing basis. Bottom chart is the S&P 500. That way you and I can make heads or tails out of what is really being communicated to you and I. Now, back on December 22nd, December 23rd, December 27th, December 28th of 1993, we had a closing reading on the VIX index, a spot VIX index of 931, 948, 970, and 982, respectively. Do you think that the S&P topped then? The answer is no, but we've got to go to a break. When we get back, folks, we're going to go take a look at when there actually was a top and why there was a top. Don't do it. Don't short S&P 500.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry PESAVENTO, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, to Trade What You See with Larry PESAVENTO, although this is Steve Rhodes filling in for Larry for the morning. Before we went to break, we were taking a look at the historic volatility index. That happens to the spot VIX index. That happens to be at the top portion of my chart out here. Bottom portion is S&P 500, because you're going to hear people report on it all day. They just talk and talk and talk, but they don't tell you what in the Sam heck it means out there. And I want to tell you what in the Sam heck it actually means, how you can go ahead and apply it. In fact, a week from tomorrow, I'm doing a workshop for subscribers. You can attend it. The 5 essential patterns for timing the markets out there. And if you're watching us on Tiger TV, you're going to see number 5 says the VIX and its timing signals. So I'm going to go ahead and give you one of those, but there's going to be more covered during that workshop. We'll also take a look at one of the topping patterns out there. It's a beauty because it's been present at the top of every bear market that has formed out here. I did a free workshop for all for all TFNN listeners. So it's on your homepage if you are a TFNNer out there. It was a 30-minute workshop. You ought to go test that out. We're going to take a look at the oscillator and change line, Japanese candlesticks, and how to master the D point of the A to B equals CD. So I'd love to see you there. It's very easy. Just come on over to the homepage of TFNN.com. You can try my newsletter service, Mastering Probability. If you had, you would have got in on the long NDX 100 trade that we did weeks ago. Still long as we speak today out here. And there's basically you can try the newsletter for free out here. So again, that's going to be next Wednesday. So if we take a look at what does that mean, because you would think the way that people talk about it. I was on a long airplane ride yesterday, and you could listen to the guys. I wanted to reach through the screen. To just say, why are you guys feeding so much BS before Steve information to all of those listeners out there? Now, I gave you one little hint out here. First of all, there has never been a point in time when the volatility index has been at a low level where it has formed a market top. So let's just make sure that we clear that up. Now, I can't control what happens next. Could it happen? Yeah, history doesn't have to repeat itself, but does it repeat itself? Yeah. Now, back in 1993, when we take a look at a time period out here, December 22nd was that $9.31 close. You can see that on the 23rd, the 27th, the 28th, they gave you numbers out here. Went from 931 to 948, the 970, the 982. You see we have higher closing lows out there. That's actually a decent signal, especially when the S&P 500 is continuing to move higher. That alone is not going to go ahead and solve the equation out here. But by the way, the actual top back in 1994, it wasn't a top that lasted for a long period of time, took place on February 2nd out there. That's when it reached a closing high of 482. It wasn't the intraday high. That was the closing high. That was February 2nd compared to December 22nd. Yeah, we've got plenty of examples out here that we can take a look at. So what you want to know when everybody else is spewing out this stuff here about the low VIX as if that means that that's it, that the top is in, or that you ought to just simply go out and buy calls on the one of the ETNs, which is just a nightmare unto its own. Exchange traded note, for goodness sakes. An IOU, so to speak, out there where they can just simply go ahead and charge you whatever fees it is that they want. But that's neither here nor there. Nobody's ever won that game other than the casino out there with regard to those ETNs or ETFs. With regard, just make sure that you are a very, very good, fast-fingered, you're sitting in front of the screen, day trader if you're going to trade one of those dangerous vehicles. Now, if we just simply come out to 2000, we take a look at when the S&P 500 actually formed a top in 2000, by the way. That was at 1527.46. Do you think that the volatility index was somewhere around $9? You would almost think that that's the presumption that people who are reporting on this would have you believe. No, the answer was, of course, it wasn't. It was $22.26 out there. It wasn't $9, folks. That was at the top in 2000 out here. And of course, you might say, well, what about the top in 2007? I'm glad you asked that question. And we'll go take a look at it in a moment out here. If we take a look at the actual, before we get there, let's take a look at other low readings inside of the spot VIX index out here. I'm just trying to spread it out on my screen to make it a little bit easier for you to actually see out here. Okay, so as we take a look at it, back on November 21st, 2006, you got the spot VIX index closed down to 990. 997, maybe about a week or so later, January 24th, 989, 1002. As we speak on February the 20th, 2007, folks. It wasn't until February 20th, 2007, when we saw a little bit of a decline inside of the S&P 500, enough of one that you could trade. That's versus getting to one of those lows again of 990 on November 21st. Don't fall for this bear trap. We may get the market that moves lower today. We may get in fact, if there is, by any chance, a nice little sell-off, what it becomes is a buying opportunity, not one where you jump on it and say, I've missed the train and I want to go short out here. Not if you are going to buy into some of this spot VIX stuff that is out there. By the way, and you know the answer to this, that the top that formed in 2007, which on a closing price basis for the S&P 500 was 1565.15, the volatility index, the spot volatility index was 1612. It wasn't anywhere near that 990 stuff out there. So now, who was that guy? Now you know. Who was that reporter? Of course, been around for forever out there on the AM stations. You know who I'm referring to. I just can't remember his name out there. But if we take a look at, so does today's spot, Paul Harvey, thank you. Does today's spot or yesterday's close of 977, by the way, we're trading at 961 right now. Does that mean that we have formed the top that you were looking for in the S&P 500? You might say there's just not enough instances, Steve-O. There's not enough instances that you gave me with regard to tops and with regard to these low volatility index readings. That's what makes a market. Buyers and sellers out here. If you want to sell, go ahead. Now, I don't need to buy the market because I bought at the bottom weeks ago. You're not going to catch me buying this market, but for goodness sakes, you are not going to catch me selling this market because of a low reading in a spot volatility index. Instead, what you want to see out there, in order to form some type of top out here, is you want to see a rising bottoms pattern in the VIX index out here. One like we had back here that began in January 27th, 2017. You want to see on a closing basis a rising bottoms pattern in order order to give you some type of signal that there is a top that is forming. Because that's how it's worked in the past. That's how it's going to work today. That's how it's going to work in the future. That is one of those very cool timing signals. Doesn't tell you to go take the short right then. That's what I'll be doing at the workshop a week from tomorrow out here. How to use the VIX so that you can get rid of all of the garbage noise that is out there and actually use this as a tool, because it is an amazing tool to help you identify what's going on in the market. So I'm not going to teach you how to day trade those useless vehicles. Did I say useless out there? I did say useless, because for anybody that believes that going ahead and getting in that UVXY from a long-term standpoint is a good trade, you're smoking a lot of stuff that they sell out in Colorado. Because take a look at all the prisoners that it's taken along the way. Don't do it, folks. Don't do it. Steve Rhodes, team.
Larry PESAVENTO has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry PESAVENTO's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're out of the gates. We got the Dow up 13 points. She's traded at 21,025. S&P is up 2. NDX 100 up 7 points. Russell's up about a point or so. We haven't talked about gold, silver. We'll go ahead and do that. Gold is trading off $6. Silver's down 5 pennies. Of course, if you and I are going to go take a look at gold and silver, what we've really got to do is we've got to go take a look at the Japanese yen. And this little bugger is on fire. We're taking a look at a daily chart out here. If you're watching us on Tiger TV, it's trading up nearly at its session highs. Now, I have a 15-minute delay on this currency pair out here, but we've talked about this on the radio show that I do at 1 o'clock. That's the Trader's Edge show out there. You can catch the archives on Channel 9. And as the yen was making a bottom, and it formed the bottom back here in the trading session of April 17th, it was giving us a nice bullish reversal signal. It's one of the tools that I'll be teaching you at the workshop a week from tomorrow out here. It was what the yen was doing was setting up a Gartley buy pattern. For those of you that like H.M. Gartley's pattern on his book on page number 222 out here. Now, every Gartley pattern has 5 potential outcomes. Well, when you take a look at the Japanese yen, it's headed to outcome number 2. That's 114.64. You're trading at 114.05. Is that going to be the end of the move? I don't know. It may be. I know that is outcome number 2. I know that as elevators go, from traders' standpoints, is that when you get up to these floors, some people get up. Sometimes it can be in this case, could be the C point of an A to B equals CD to the downside. I don't know whether it is or isn't. First, we're going to have to take a look at the candlestick formation as that level is forming. If you're moving into 114.64 with a wide-ranging bar, as it is right now, then outcome number 3 is where it's headed to. And that's the price point of 116.41. Why is that important? Because of the absolute directional correlation between the yen and gold out here. So gold doesn't stand a chance, and I do mean doesn't stand a chance of heading higher if, in fact, the yen is going to continue to weaken. On this chart here, moving higher for the yen says that it is weakening out here. And at this stage, that's what it wants to do. So now if we go take a look at Goldilocks and try to figure out where gold is headed to, it's traded at 12.20 and just a bit of change out here. We can see that gold has broken its trend line. You might say, what trend line, Steve-O, are you talking about? Well, if we take a look at it, we'll talk about the green arrow out here. That's starting off the lows from back on December 16th. You're going to see that gold several days ago broke through a rising trend line. That's a bummer. That is a major bummer with regard to even the intermediate type look with regard to where gold is headed to. It broke through the bottom of its weekly market profile. That was at 1237.80. At this stage of the game, what we know about 1237.80 or thereabouts is simply that is a significant resistance level now. That was old support. It is now new resistance. In order for gold to possibly have a chance to get bullish, you've got to see it close above that, and you need to see the yen form some type of pattern and make a U-turn and start heading lower on that chart that we just looked at. And that is not in the cards, not as of 9:33 in the morning out here. So where is gold headed to? Well, pretty simply, we just can go take a look at the next swing point. And that's down at the March 10th levels. That's right around 1198 to 1209. You are at 1220 as we speak right now. We could also take a look at retracement levels. Let's go look at that from low to high out here. That way we can see, hey, where is the next retracement area where price would head to? Well, that gets us to 1193.80. So it seems to me, that is where gold is headed to, about a 0.618 retracement in the 1194 area out there. That's what's headed. That's what's going on there. If we want to take a look at what else? Hey, inside the den, if you want me to take a look at something, please go ahead and type it on in there, and I'll be happy to do just that. So let's go take a look at Here, let's take a look at this. Let me see gold in other currencies, because this was a signal for all the listeners of the Trader's Edge show at 1 o'clock. We looked at this last week, and what we pointed out was actually gold priced in euros is the one that is more important to you and I, believe it or not. It's not gold priced in dollars. It's gold priced in euros out here. That happens to be the center portion of my chart, my screen out here. And once price broke through that, all holy heck broke loose out here. Gold priced in yen, which is the top portion of my chart, that broke trend line. That's the rising trend line off of the bottom. It should have held. It didn't hold out there. It didn't hold in yen. It didn't hold in euros. It certainly has not held in dollars out here. So look for those lower prices in gold. Now, what's that going to do? Well, it's probably going to go ahead and put some pressure on the mining equities out there. But we have to trade each one separately out here. What I was covering for you was gold. We know there's a directional correlation between the mining equities and gold, but you want to trade each thing separately. If we take a look at the GDX out here, the GDX right now is trading out at 2141. Here's what we know about it. Really trading into, in essence, a breakout area from back on December 29th. Yeah, right as it was celebrating New Year's, had 140 million shares out there. We've been coming in with lighter volume, half the volume, back on May 4th, about 70 million shares. Yesterday, you were at about 26 million shares. Now, yesterday, let me try to explode this up a little bit here because this is going to be important for you to watch. Yesterday was a hammer candle. Yeah, it had a nice little hammer candle actually formed. That says the low of yesterday is muy importante. 21.29 is the number. You get a close below that. That says if you're long, you're wrong out there. And that would say that the GDX next target will be 2071. I say it's going to be 2071 anyways out here, but that doesn't mean that we can't see some type of bounce. Real resistance on here, it's not the top of its daily box. It's probably that point of control, 2181 out here. But watch that hammer candle from yesterday. You close below it. 2071 is written all over the GDX. Do I advise going long the mining equities, even though you trade them individually with gold headed lower out here? I say buy at your own risk, but I wouldn't issue the buy order for you out there. They can trade separately. I talk about trades out here. How about that trade that Jeffrey Gundlach put on out there? Supposed trade that he put on out there. And a trade goes like this. At least that's what I heard on CNBC yesterday during the flight back. It was like, really? What does he know? And some say he knows a lot out here, but what does he know that you and I are missing? And what do I mean by that? Well, he didn't actually say the EEM. Okay, he only gave half of the trade, really. He said he went short the S&P 500. Of course, you know how I feel about going short the S&P 500 with a low volatility index. That doesn't make any sense. It might make more sense next week, but it doesn't make any sense as of yesterday's close. That is for sure. But if we take a look, and he said he went long the emerging markets. Now, he didn't list out how he was doing that. He didn't say which emerging markets. He didn't necessarily mean, at least unless somebody else can find it out there, he didn't actually mean the EEM, which is one of the emerging market ETFs out here. But if we take a look at correlations, directional correlations between the S&P 500 and the EEM, you're going to see that there's a pretty good directional correlation out here. Now, it did break down, true. It did break down when the EEM made a top back in April of 2011. That top has not been taken out. If we take a look at trend lines, maybe let's go see what is that trend. In fact, we can take a look at a trend line going back to its actual high inside of this ETF from back on October 27th. But that's probably a significant resistance level. So it could be a bit higher. But actually, I don't understand the trade. It doesn't make sense to me when we look at the charts. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Market Dow's up 6, S&P's up 1, NDX 100 up 14 points. That's the the semiconductor index, actually the leader to the upside, up about 0.5% out here, $5.50. Let's take a look at some individual equities that are moving this morning. Let's look at some things moving to the downside. How about Transdigm Group? TDG is the ticker symbol, gapping down this morning. So they were out with numbers. Their numbers go like this. They did about 3.5 billion in sales. Their net income was 155 million. That was up 10% versus 141. But that appears to not be good enough. Or guidance isn't good enough. We can see this thing is moving lower. Volume so far about 250,000 shares. Now, on an average day, this trades 1 million shares. Well, example yesterday, as was making high. Here's what we know. Here's what we believe we can conclude out here. It's trading right into the bottom of its daily box, slightly below 244.02. If we see a close below 244.02, you're at 241.90 right now, then our assumption is that price will pull back into the 231.64 level and then maybe down to 214.89. If in fact 244.02 holds and you see a close above that, well, that would be pretty impressive. That would actually say you make another run for those highs of yesterday or even the 259.57 level. That's the daily chart for Transdigm and what it is, if I pronounced it properly, and that's what it is that we're looking at out here. So as we speak, as of 9:43, it's trading below the support level and would suggest a run to 231.64 would be next on its target list out there. How about the international flavors, and fragrance? Hey, I like that. IFS is a ticker symbol. Shareholders don't like it. It's down 5% right now, off $6.85, gapping down. Trading right now into support. So here's an important price level for, ticker symbol IFF, the International Flavors and Fragrance Organization out here, and that's at 130.53. That's the bottom of its weekly box, which formed just this week. Now, because this formed above the prior weekly box, that should be good support. We can see there are buyers trying to come in here right now and support 130.53. If it fails, though, well, then there is no fail-safe out here. Then there is no other support level other than coming back to this high-volume bar, which is where it would target. That would be February 16, 2017, anywhere between the 120, even Steven, and the 126 area, that being IFF. If we go take a look at the Nevro Corp out here, NVRO is the ticker symbol, off $6, about 7% to the downside. Now, that is not a good-looking gap. That is trading right down and is trading below its weekly profile level of 80.60. You are at 80.38. Volume is heavy. This one has got volume inside it, already 941,000 shares. So this says that it's going to go ahead and head down towards the lows out here from back in December of 2016, right around the $69-ish market value. NBRO price point is where it is that we're looking at this headed to. Let me see what else. We got a couple of things out here that are taking a little bit of a beating out here. Next Stage Medical, NXTM, is the ticker symbol out here. This has got 730,000 shares. This is below everything. It's actually testing a swing point from way back in November of last year, November 2nd to be specific, which only had volume of 745,000 shares. You're testing with 731 as we speak right now. It's holding. But the question is, will it hold out there? I don't know. But it looks like this thing could or should trade lower. With a gap like that, it probably wants to head back into the $18 range. And if it doesn't stop there, look out below, because $13.64 would be all that is in store for NXTM. Now let's look at a couple of things moving to the upside out here. Moving to the upside, you've got World Acceptance Corp, WRLD, the old GMAC out here, 144.6 million versus 144.1 million last year in total revenues. Their net income was up 6.8% out there, but that's not to be unexpected. Virtually every company that has a CFO that is worth a hill of beans out there was going to beat their numbers, was going to be more profitable this quarter than they were last quarter, even going back and comparing it to the prior year's quarter out there. You might say why, and I would say because nothing could have been more broadcast when Donald Trump won the presidential office out there. Because you know that he's going to do what he can to try to push for tax reform. And that meant that what those companies were doing was they were doing everything humanly possible that they could get by the auditors. Even if they couldn't get it by, they were going to go ahead and try, which was to accrue as much as they could in expenses so they could go ahead and back those off over time and defer as much as they could in revenues. That way they could get the tax benefit. Every economic person, they would teach you how to do that in a good economics class, just not typically most of the colleges out there. But that's what these companies most certainly were doing. So I don't know what the percentage beat is out here in the S&P 500. But I'll bet you it is a beat. I'll bet you it's north of 50% out there. Of course, speaking of betting, how about that horse race, the Kentucky Derby? Just happened to be out in Las Vegas over the weekend out there. And I'm not a big horse racing person, but I was asked to put a few dollars down on one of the favorites out there. And when I actually took a look at the horses, now, some of you that know me know that I have several favorite movies out there, one of those being My Cousin Vinny. But one of my favorites happens to be The Battle at Midway. And so I'm looking at the racing form, and I was saying, well, this is an easy pick. Here's a 40-1. And go ahead. I turned right around, went right back to the sports book, and went ahead and put some nice bread down on to show, by the way, the Battle of Midway. And sure enough, the horse came in. That was a beautiful thing. Now, in the case of World Acceptance Corp, it's a beautiful thing because you've got 299,000 shares so far this morning, taking out a previous swing point. That only had 68,000 shares. That's a confirmed A to B equals CD at the upside. Let's go see what else this might be trading into. It's trading into a big little gap or supply line out here. So if we were going to suggest to you where price is going to head to, where it may run into trouble, a little overhead resistance, we'd say it's in that price level about 82.20 to 84.04 out there. And that is ticker symbol WRLD. You've got Wayfair. W is the ticker symbol there. That's up 19%. That's a nice move. 2.7 million shares behind it out here. This thing is at all-time highs. and doing it what looks like with some pretty good volume out here. So that's a nice move. There's no resistance that I can see in taking a look at the daily chart on it. Now, we got about a minute to go, or really about 30 seconds, and I think this is the last segment. I didn't get the sign here. I haven't done Larry's show, and I know that we've got, Tom does a segment out here. So if this is the last segment, look, folks, don't, and again, I'm not sure, but look, the one more short segment after this breakout here. Okay, so I'll wait to just share with you what it is I was going to share at that stage. Let's take a look at one more company, Sturm Ruger, the gun company out here. Let's go see what they're doing. A nice move today. You've got some decent volume. This is taking out resistance. That would have been the gap to the downside. Any close today in Sturm Ruger above 64.15 is a change in trend. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes filling in for Larry PESAVENTO, closing out the last segment out here. So just to summarize what we've taken a look at. First, we spent a bit of time this morning on the volatility index. The low yesterday, low closing low of yesterday of 977. Not the all-time low. The all-time low out there was back on December 22nd, 1993, $9.31. What you learned What we know is that that did not form any kind of market top. It wasn't until much later that there was even a short-term market top out there. That refers to taking a look at the low readings inside the spot volatility index back in 2006 and 2007 as well. This time is no different out there. It is no different. Be careful if you are going short the S&P 500. Being down, don't jump to the conclusion and assumption that because the VIX is at that all-time low that now is the time to go ahead and take a short in the S&P 500. It wasn't in the past. It's not going to be today. It's not going to be in the future. Instead, what I want you to do really is I want you to go ahead and consider spending an extra hour with me next Wednesday, because it's very easy to do. All you have to do is come over to the homepage at TFNN.com, sign up for our newsletter service, which you get to test drive for free. And I'm going to teach you the VIX and its timing signals. I will teach you some very cool signals out there. That way you don't have to get lost in the noise of what the TV commentators are telling you. I'll show you patterns that actually work, that you can use to improve your trading and investing. I'm also going to do that by sharing with you and showing you exactly how to go ahead and identify these price relative strength divergent patterns. We didn't really talk about those this morning. I do that a lot, certainly during the show that I do from 1 to 2, the archives being on Channel 9 out there. There was an entire workshop for 30 minutes. When I say entire, in 30 minutes, I saved you years and years worth of time by understanding what patterns are present at every major market top. Are they present right now? The answer is no, they are not. But there is the next bear market that is coming. There is another correction that is coming. That much I can assure you. You and I, we're going to go be able to spot that so that we can go ahead and take that trade to the short side, just like subscribers and I took the long trade weeks ago to the long side inside the NDX 100. So, folks, it's been great to be here. Stay tuned. Tom O'Brien and Tommy O'Brien will be up next. I'll see you at 1 o'clock. Have a great Tuesday. We'll see you this afternoon or sometime soon. Take care.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.